Hello, 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 hello. Mic test. So I believe the screen is there. So I believe the screen is there. However, I'm not sure how much. I'm not sure about the audio. So yeah, I see there are people who are online on YouTube. So yeah, I see there are people who are online on YouTube. Hello, hello, hello. Mic test, mic test. Hello, hello, hello. Mic test. Okay, so I take it the audio is there. The video is also streaming. However, the view count is really low today. I guess the notifications are not working. Okay, so I'm getting some comments on YouTube. Vivek Malhotra, hi Neerav, hi Vivek. Watch YouTube says yes. Okay, guys, so that means everything is good, and that means we can now start the webinar. So before we proceed any further, here is the quick disclaimer suggesting that all content presented here will be for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here, you yourselves will be liable for your profit, loss of profit, etc., etc. Okay, now that we are done with the legal disclaimer here, let me give you a very quick introduction. My name is Neerav, and I'm a trader as well as a mentor, and I'm also the founder of this website, 50 Eyes Market Analysis, or 50eyes.com. I've been trading since 2014. And here is a very quick summary of all my work in the public domain. I have been keeping a track record of all the forecasts that I have made throughout the years. 2016, my accuracy was 83.34, 2017, 87.5, 2018, 84.6, 2019, 84.88, 2020, 88.52, 2021, 82.22. So basically, I'm just showing it to show you that I know what I'm doing. And for those of you who are not well aware of the accuracy in this domain, generally even 60% is considered very high. So I'm beating all the industry standards here for 6 years consecutively. So that's about my work so far. And those of you who are very new to this webinar, my field of specialization is Elliott Wave, which is an advanced form of price action analysis. And it can be applied on all time frames and all charts. So that's about it about my work and about this webinar. This is the 38th webinar in the series of the monthly Applied Elliott Wave webinars. So without any further ado, let's get on. So I believe the chart of crude oil must be visible on screen. Anyone on YouTube can comment, or even on TradingView if they are live on TradingView. If you can tell me if the chart is visible and the audio is clear once more, then we'll just go ahead. Vivek, I believe you are still there, right? Thank you, Vivek. So now that everything is all good, let's proceed with the webinars. The way we will go is that first of all, I'll discuss the chart of crude oil. Then I'll ask you guys if you have any doubts or queries. If you have any doubts or queries, then I'll just address them. If not, then we will move on to the chart of gold. Then again, I will ask the queries, and then the S&P chart, and then the Nifty chart. So these are the four main charts that we cover. So on the chart of crude oil, we are on the 4-hour time frame, as can be seen on the top left. I am using a CFD data, and data provider is O and A. So if you are using the actual CL1 data, which is the crude oil NYMEX futures data, then the prices will vary a very small bit. Let's quickly check that. So on the NYMEX future, the price is 90 to 60, and on the CFD contract, the price is 93. So there is a very small difference, just to keep in mind. Now let's go ahead with our analysis. Our point of reference, or the starting point from which we will start the analysis, is here around the level of 131.314. From this point onwards, we seem to be having a corrective leg down in three waves. So those of you not familiar with Elliott wave, we are talking here about three wave correction. So three legs down, three legs up, and then five legs down. Something like this. Could be a ABC, could be a WXY. Let's just consider it simply as an A here. This first leg down will be considered as an A. The corrective leg up again, this one is called a B, and the last leg down is called a C. So B is here as per my understanding, and C is here. So a little bit update from our last count. I am assuming that this is a possible diagonal, basically an ending diagonal completing the wave C here, right? If there is an ending diagonal completing the wave C, that means we are going to see some sideways or upside movement, right? So sideways would have been a triangle, but it does not look like there's going to be a triangle. I personally think that this is going for a B, C kind of a move in the upside direction. So again, to summarize what I just said, we seem to have completed a corrective leg down here at the low around 76.475. From here, I expect at least three legs in the upward direction. So the first leg is already here. Let's call it a 1 or A. The second leg is either here, 2 or B, right? And the third leg is here, C, 3 or C, right? So the third leg, the minimum requirement is it should take out the last high, which is the high of 93.861. So it is almost there. It is just about to do that, right? With that knowledge, let's shift our point of reference to this low, which is the low of 76.37, and analyze things a little bit in more detail. So from this low of, let me mark it, from this low where the wave C is supposedly complete, we are saying that we are expecting at least a three wave movement in the upward direction. And as I just said, it would be labeled as either 1 or A, 2 or B, and 3 or C. Now there is a small argument here. I personally think that 2 or B may still be continuing. So let me just clarify what I mean by that. So first of all, the structure is expected to be a zigzag kind of structure. A zigzag kind of structure, again, to those not familiar with Elliott wave, would be something like this. 1, or let's say A, B, C. So that's why I'm saying that the last high should be taken out. However, I think that this 2 or B is not really finished here, right? There is a strong chance, or a good chance at least, not strong, that it is continuing as a flat correction. In the case that it is continuing as a flat correction, we will see something like this. And then where there will be a C up. So that means either it will go straight up, or we are going to see some leg down or movement down basically, and then up. So if you were to summarize it in the form of these bluish color arrows, then we can say that something like this. 1 second. That's basically it for our analysis on crude oil, right? If you guys have any query, just post it in the comment section. While in the meantime, I'll just quickly check the 1:1 levels. If you are, by the way, clear on what I discussed, you can just type in clear in the comment section. That would be better. What about you guys, Vivek? And I can see there are total of 9 people who are online. So a few comments would be much appreciated. That way I would know that you guys are on the same page with me. Okay, so last point which I wanted to make was that the 1:1 level is what we will look out for. It is coming around 99.384. So that will be our supposed target on the upside. Thank you for the clarification there, Vivek. So now that I do not see any doubts on this, let's move on to the next chart, which will be of gold. We are on the 4-hour time frame on the chart of gold here again. And our analysis starts from the price level around 2076. Date is around 7th of August 2020. So from this point onwards, there are actually multiple scenarios on this chart. I'm just going to discuss the top few scenarios here, right? So let me just see if I can squeeze more. That does not look like a possibility. Okay. So the first scenario is that we are looking at a possible ABC or a WXY downside kind of a correction. Now let's just go with the simplistic approach. Let's just say that we have a W here, X here, and the Y is still going to the downside. Now, one second here, let me check one thing before I proceed further. Yeah, it's fine. So if we go ahead with the assumption that we have a W here and an X here, then we will need a wave Y in the downward direction. So that means we can analyze this chart from this point of reference around the high of 2070, almost the same high. So from this point of reference, we are having a sort of a diagonal structure here forming, right? Now, if we are assuming that this was a X here, so the Y will be in 3 waves. For those of you not familiar with Elliott Wave much, wave Y would look like this. So if this is a leading diagonal, then this will be considered the A of the Y. This will be the B of the Y, and there will be a C of the Y. So that is basically suggesting that even though this market is looking like it has some upside remaining, that upside might just be a temporary move. That's one of the main views. Second view, so basically what this view is suggesting, let me just quickly conclude, is that we have one up leg remaining, which possibly will take out the high of, what is this, 1727, right? However, there is a possibility that it will just remain sideways within the price range of 1727 to 1612. But the interesting thing or the important thing is that even if it remains sideways, it has to take out this trend line, right? Only when it takes out this trend line can we consider the B as complete, as per my understanding here. And only after that we can expect any downward movement to proceed in this market. So basically, instead of looking for levels or patterns here, it's more important that we focus on this trend line, which will be the 2-4 trend line. So that's one of the main points which I wanted to make here. Just look out for this 2-4 trend line. We expect at least a small break above it, if not a very large break, right? So let's just consider this possibility as a hyper one, which is suggesting that first we will move up and then there will be a leg down. There is a second possibility of hypo 2 suggesting that this whole move let me squeeze the chart back again. So the second possibility is suggesting that this whole move can also be looked at as an A, a B, and a C. And if we consider that possibility of an A, B, and C, then it will become a flat case of a flat. And in case of a flat, 3 down, 3 up, and then 5 down. 1, 2, 3, 4, 5. Right. So in the case of a flat, 3 down, 3 up. So this is the point of reference. This is the point of reference, and this is the 5 down because a leading diagonal is a 5-wave down progression. So there is a second case which is suggesting that the whole move is complete here to the downside, and this market can just fly from here, right? So now that both counts are clear, if we consider them over here and do some reasoning, we figure out that both hypo 1 and hypo 2 are suggesting that in the shorter time frame, or what do you call, the coming sessions, we expect at least a small leg up, and we also expect that this small leg up will take out this trend line. So that is the main theme, or that is the main thing we expect here, a small leg up which should take out the trend line. So based on that, we can do analysis in the intraday session, and analyzing the intraday price chart, we can form some trading strategies. That's about it for gold. Watch out for this trend line, and I'm expecting some upside movement in the shorter time frame. Do keep in mind, by the way, if you guys are clear on this, just type in clear in the comment section. If you have doubts, just write the doubts and I'll check that. So one more interesting point to note here is that even though we expect the market to take out this trend line, that does not mean that it cannot swivel lower than this low first. What I'm trying to say is that if this is an A, then the wave B can go like this as well, right? So keep that in mind. One leg or a movement higher than the trend line does not mean that it will go, or it has to go straight up. It can just go a little bit lower first and then up, right? That's about it for gold. I'll just wait for a few seconds and see if you guys have any doubts. Also, I'm seeing a lot of participants are online, but the comments are not coming in. Little bit more participation would be better. Anyways, I guess there are no further doubts here. So I'll just move on with the next chart, which will be the chart of S&P 500 here. Let me see which one I'm following. This is the one. Okay, so in this chart of S&P's 500, our point of reference is the high around the level of 48.23. Again, I'm using a CFD chart here, so E-mini prices will vary a little bit. So at this point of reference, around 48.21, we have what we think a diagonal formation going in the downward direction. Now, this diagonal formation again suggests the same old thing which we have been discussing so far. We are expecting A, B, C, most likely a zigzag kind of correction. So this will possibly be your A, this will be your B, and this will be your C leg down. So basically A is complete here, right? Now that means we are to focus on the B wave, and the B wave here is either complete here, or it is continuing, or it is complete here, right? So these are the possibilities. Now if we consider the fact that the B wave is complete here, one second. Yeah, so if we consider the fact that the B wave is complete here around the level of 39.22, right, 22 something, then we are to assume that the leg down will come out for wave C, right? So this will be your count in that case. A down, B correction, C down. However, the important thing to note is that B waves by their very nature are quite deceptive. So it may suggest that it's complete here, but it might still be continuing. However, here is an interesting observation I made, which I was doing in my proprietary analysis. I figured that if this market can hold on the level, let me check, what was it? Yeah, 8th November. Yeah. So if this market can sustain above the level of 3,500 till 8th November, then there is a strong chance that this market is going to either remain sideways for a while and then fall down, right? So that's my proprietary analysis, basically suggesting that if this is an A and if the B is complete here, then by 8th November session end, we are expecting a break. If the break comes by then or before that, then I will be looking or will be much interested in taking on short side trades. If the break does not come by then that means this B is possibly continuing. It can have multiple variations. It could just be a triangle. This will be your A of the triangle, B of the triangle, C of the triangle, D of the triangle, and E of the triangle. So triangle basically is a sideways kind of corrective structure which will look something like this roughly, right? So if I were to draw it in the rough area, it will look like this: A wave up, B wave down, excuse me, C wave up, D wave down, and E wave up. So as I just mentioned, if by 8th November session end, this market does not break the low 3500-ish level, then it is possibly proceeding as a triangle or some other sideways movement or something like that. If it does break it, then obviously we will be looking for some shorting opportunities. So that's my outlook on S&P's 500. Again, if you guys have comments or any doubts, I'll just wait 3-4 seconds. I do not see any comments, so I am assuming that everybody is understanding whatever I'm saying. So in that case, let's just move on to the next chart, which will be also the last chart of our general discussion, which we'll do, or the regular discussion, which we'll do. Oh, thank you, Vivek, for the clarification. So the last chart will be of Nifty's 50, right? So very different from the global markets, Nifty has not really given much of a fall, unlike S&P or basically any other major index. It is sort of doing its own thing. Excuse me. So let's quickly have a look, right? Let me just take a look on it from 16th June 2022, right? The price level was around 15,181. From this level of 15,181, there are two main possibilities which can be happening here. It looks like I'm not able to check the comments. One second, guys. It looks like people are commenting here, but I'm not getting those comments of TradingView. So let me just quickly open TradingView again on another browser page. Just give me 1 second. This link. Hey, Mohammed, please don't promote some random websites here. Okay, so I'll have to go to tradingview.com/streams. Oh, so people are online on TradingView and they were commenting. Sorry about that, guys. The browser I have open here is showing 0 online and 0 comments. That is very surprising. So CAX H Prince on TradingView is saying thanks, and Almost Gold is saying thanks, and then CAX H Prince was saying, is it a good idea to consider other time frames like 6 or so? Cax H Prince, the general uh, thing which is common in commodities, metals, etc. is 4-hour time frame, because these are more or less continuously running markets. The same applies to forex. So for markets that run like 22 hours to or more, basically 20, till almost like 24/7, go with 4H time frames. 6 hours I have not used it, and I've never heard anyone else use it either. Right. So next question was from Almost Gold. 1711, I see resistance for gold. Let me just quickly go back there. Where is 1711? Yeah, if it's, I think we were with the view that we have to check out for this trend line. So we can do a very quick thing here, a quick trick. If we assume that this market will take out the trend line in the next session, then we can just point our mouse using the daily chart and see what price level will be at the trend line. You're getting the vibe here, right? It's a very simplistic view of looking at things. So this is the next session, and this is the mouse pointing at 1711 actually. So Cax H Prince, you are actually precisely right here. That will be the level of resistance for the next session. So next comment is again, oh, that was actually from Almost Gold. Sorry about that. So Cax H Prince was then saying, awesome, thanks. And then next comment is, I don't think you are seeing the charts because people are thanking you. So sorry about that, as I just said, because some problem with TradingView. It is not showing me anything here, so I had to open it in the incognito tab, and now it's showing me the comments. So I'll call you Cash now. Okay, guys, so that's enough for that. Let me check if there's any comment on YouTube. Vivek is saying, since gold has almost made a triple bottom, so chances are high that it will break 1713. Uh, let's just see. Triple bottom is basically just a fancy word that does not really mean much of anything. So, for instance, Vivek, if this market had to fall, the same thing can be said in the opposite way. Let me show you what I mean. Second, if this is an A, this is a B, then this will be the C, right? So in this case, let me just label it even more clearly so there is no doubt. So this will be the wave A of a lower degree. This will be the wave. 1 second, I think I made a mistake here. Let's just assume that this was going to become a diagonal here and then fall. So in that case, the triple bottom is actually suggesting, Vivek, not a strong base, but a strong level which is going to break. And once it breaks, a bigger move can follow. Now, how am I saying that? If we assume that the C is complete here, and let's say the trend line was somewhere here, I'm just drawing it imaginarily, right? Then you can look at it and you can say that this is now going up for the C, right? And once it goes up for the C, and if you remove all this, what do you call, count which we have done, you will suddenly realize that this triple bottom is actually not a triple bottom, but a invitation for sellers or bearish traders, right? So while you are looking at triple bottom as something for a buying opportunity, here in this case, I think it's better suited as a selling opportunity. That's why I generally prefer to not use terms like double or triple bottom, because if you actually familiarize yourselves with Elliott Wave and apply it, you will realize that a lot of patterns form these doubles and triple bottoms, specifically ending diagonals. When they complete, you will sort of see a double bottom at the top, right? So sometimes they mean something, sometimes they don't mean anything. So I prefer to avoid these things. So anyways, that's my take on what is it, double, triple bottom stuff. I prefer to avoid them. I guess I made the point quite clear with the explanation there. I'll just update the live chat, refresh it to see if there is any further new comments. Don't want to miss any comments again. Okay, so I don't see any more comments here. So let's continue going here. So continue going here. The last chart is of Nifty's 50, right? So in Nifty 50, what we generally, as I just said, we are going to observe it from this last point of reference, right? So from this last point of reference, there are two main counts. I'm just going to first talk about the count which I have on screen here in front of me. So the count I have is suggesting that this is the 1, this is the 2, and this is the, where's the 3? Let me just quickly check again. Yep, so the 3 is considered complete here, and this is the A, B, C for the 4th. So that means the 5th is under progression. If the 5th is under progression, then you draw the 2-4 trend line, and then the 2-4 trend line's parallel is drawn from 3. So this trend line will act as a resistance. So this will be your possible target. So draw it on your own charts and use it as such, right? Other than this, small short-term target is around 18,300 or 18,299 to be more precise, I believe. So 18,299 should act as a short-term resistance, and a little bit more swing type of resistance will be this high around this trend line, which will be, I believe, in the range of 18,800 to 19,000, right? It really is looking bearish compared to every other index out there. So just to quickly look at the higher targets. So if things continue to proceed as they are right now, then next resistance will be around 19,452 and next one is 19,937. That's my quick take on Nifty. I believe some upside is remaining and short term, long term, both targets we've discussed. So I believe that concludes all the major charts that we discussed. Right? If you guys want me to take a quick look at BTC, then just type in the comment section and I'll take a look at it. Otherwise, these are the main 4 charts that we discussed: crude, gold, S&Ps, and Nifty 50. When we have already discussed them in almost 30 minutes. That's fast. Generally, these webinars go to 58 minutes and sometimes more than 1 hour. Okay, I see Cash is asking for BTC. Let's have a quick look at it. Load chart layout. BTC's W2. Load chart layout. Okay, so BTC long-term analysis. This is some trend line, this orange one, right? So worth noting here that this orange trend line is coming from some past price data, right? Let me see if I can show you what that is on the weekly chart. The hell? And how is it that it's not? What's the dinosaur doing here? Very beginning. Okay, funny way of showing things. So TradingView does not have the complete data, and they have, or so, for some reason my trend line is also ruined. Anyways, let me redo it. So what happens is just one quick thing here. If you are using log charts like I am, sometimes what happens is the TradingView software sometimes messes up the trend lines. It does it on its own. I've seen it happen multiple times before that I have a trend line, but when I go back and see, it does not have any base to it. Like, why is it happening, right? So it's just some error with their whatever it is, server data or programming software. So 2-4 is already broken, so we are in double bracket 3. So that means double bracket 4. Double bracket 4 means we are looking for 38.2 retracement. So let's ignore the trend line. Maybe I drew it with some other points, and because I cannot figure out the exact things now, we'll have to ignore it. So see, the general idea is in this longer time frame count, we have the double bracket 1 here, double bracket 2 here, and double bracket 3 looks complete, right? And the double bracket 4 is under the continuation, right? So the double bracket 4 generally will go to 38.2 retracement, but in this case, as you can see, 38.2 was around 41,000, right? 41,795. And this market currently is trading around 21,276, which is lower than 61.8, right? So that leads us to believe that there is a possibility that this is forming another series of 1 and 2. I'll just explain it in a second. let me just do this. Right. So again, now let me clarify what I meant by the last statement. So what I was saying was that a wave 4 will generally go to the 38.2 retracement, but in this case it is going lower than 61. So that would be suggestive that we possibly have another one here, right? So what I mean by that is single bracket 1, single bracket 2, followed by another 1 of a lower degree and then another 2 of a lower degree, right? And then it will go for the 3 of the lower degree. So basically after this 3 of the lower degree, there will be a 4 of the lower degree, a 5 of the lower degree, which will complete this single bracket 3 of this degree. Getting it? So that will make the single bracket 1 here, single bracket 2 here, single bracket 3 here in the future, right? So that is a possibility that's very bullish, right? Given the current scenario, I would not be considering it as a very high probability scenario. But if that were the case, we can draw a small conclusion here. We can draw the conclusion that if it really was a dot 1, and if it really was a dot 2 here, which looks to be the case as a 3 down, 3 up, and then 1, 2, 3, 4, 5. But this is again, don't consider this as actual count. I have the actual count on chart. We'll look at it later. So the main point is, if this is the 2 here, then this 50-60% box is important. How is that important? If this is the 2, generally wave 2 will retrace till the 61.8 retracement level, right? So because 61.8 is the retracement general level, if the market goes higher than this box of 50-60, and if the price action sustains above it, right? Let me just draw it so that there is no clutter. Yeah, now I can remove it. So if the price, let's say, goes above it and then sustains above it, right? Let's say forms a base here, then that will be a possible suggestion that this market possibly is looking bullish. Okay. Again, that's very simple. We just drew the 50-60 box, and now we are saying that if the market sustains above it from this price level, then that will be a sign that there is possible bullishness in this market. That's all basically I'm saying, right? So now let's see what that level is. So now that level comes around 33,551 to 26,000. So 26 to 33,000. So again, as I've said in many of my past webinars, this is not a very traders friendly market, right? If the levels to trade are this wide, right, that you have to wait from, what is this, 21 to 33. So you have to wait from 21 to the market to go above 33, right? That's like 12,000 something points. So how is that traders friendly? So anyways, speculators, I don't believe are much active in this market. This is mostly for the people who do not know what speculation is. I believe those are the type of people who generally involve themselves in BTC. And maybe if you have some, what do you call, way of taking higher leverage on this instrument, then obviously, again, those are the second types of people who would be involved in this. So anyways, that's my quick take on BTC. Am I still live? Am I still audible? Now TradingView is showing that my stream has, what do you call, a play button. Is it stopped? I'm not clear. I'm not clear what's happening here. Can somebody? Oh, there is a comment here. So that means I'm still live. Okay, there is a request for USD JPY. Before I move any further with anything, I like to make it very clear that I am going to be performing a lot of these public webinars. I mean, not this monthly one. The monthly one is the monthly one. But I'm thinking of doing some webinars on like regular weekdays, maybe 3-4 times in a week, right? So you guys should be active. Obviously, I'll be covering Forex pairs in those webinars, right? Because I'm also trading Forex markets. So I'll see how it goes. But for those people who are currently online, I'm just telling you, I'm giving you a head start or a heads up that I'll be going live a lot more. So the timings I'm thinking, this webinar was done at 7:30 IST. And I'm thinking of doing a little bit like 2 hours earlier than the time for this webinar, right? So I'll test a few different times. I don't know what time TradingView people are live generally or active generally. So I'll test out the timings. But most importantly, just follow me on Twitter. There should be a link for Twitter. I don't know if it's my Twitter or what. Below this webinar, yeah, below this webinar, no, that's not it. Anyways, my Twitter is at the rate of 50 underscore EYES, 50 underscore eyes. Or you can just go to my profile and find the Twitter handle, right? So just follow me on Twitter. Whenever I'm going live, I'll just update it there. Secondly, if you are not subscribed, you can subscribe to my emailing list here for further updates on the monthly webinars and other stuff. And the link is 50eyes.com/subscribe-emailing-list. As a matter of fact, this is my Twitter handle, 50 underscore eyes. I'll just quickly post it here. Let me see if I can post it. I'm not sure if the thing went, like if the comment got posted or not. Anyways, I would be... One second, let me just check by reloading the page. Oh, it did not get posted. So anyways, you can just check the link from there, right? And most importantly, I want a lot of participation in these webinars, which I'm saying will be on weekdays. Because if there is more participation, then I can continue doing them. If the participation is less, then what was the point? Right? So definitely join in and also share the links later on. Okay, there was somebody asking for USD JPY. I'm not sure if I have done the proper analysis on that chart. So let me just quickly check it. Also, I'm not sure if that person is online anymore because I'm seeing the number of participants have suddenly dropped a little bit. Oh, I have done the analysis on USD JPY. So my quick outlook is not going in detail on the longer time frame. This is the 15 minutes chart, and I'm of the view that we have a wave W over here. X is possibly complete as a triangle, and then the Y should follow, right? So that's my main outlook, which is suggesting that below this yellow trend line, we should be looking out for some shorting opportunities, right? But before we consider this as the only thing, I would like to point out that wave axes are generally quite deceptive. So it is possible that it goes sideways or maybe gives the leg higher before any further fall, right? So just keep on, be on the lookout for that. And that is the reason I've put a alert over here at 148 and an alert over here at 146. Below 146.062, I will look for possible selling opportunities on JPY, right? If it goes higher, then I'll just wait and see how things unfold. So that's my quick look on USD JPY. So Ronald, hi Ronald, very late you are today. So yeah, guys, again, those of you missed, I'm planning on doing some public webinars on TradingView, right? So these will be done on the weekdays. Currently, I will be experimenting with some different times to see which time is the best for the audience on TradingView. And that's why I'm asking you to follow me on Twitter, right? I'll post whenever I'm going live over here. Also subscribe to my mailing list for further updates, right? I want a lot of participation in the public webinars, and just share the links on Twitter when I post them. Just share it with other traders so those guys can also join my public webinars, right? I will be covering a lot of currency pairs on the public webinars thingy because I'm trading a lot of currency pairs these days. I mean, not a lot of, but I'm trading currencies these days. So that's the quick update from me. And yeah, lastly, I have to promote my stuff as well, right? Very quick. I have a video course on Elliott Wave. You can just check it 50s.com/Elliott-Wave-course. I have a personalized training classes which are done like one-to-one classes via Zoom. If you are interested in learning the advanced concepts of Elliott Wave, you can just go to 50s.com/training-program-LT. The link is here, right? And yeah, that's about it. So see you guys next time. Also, do share the link of this particular webinar with at least 2 to 3 of your colleagues or trader friends or in your social media profiles so that I can reach a much wider audience. Even if, let's say, one person shares with 3 people, then I get 3 more views. And if 10 people will do it, I'll get 30 more views. So you're getting my point, that growth can be exponential. So guys, I'll see you next time. Thank you for the comments. Cash is saying good stuff. Thanks again. You're welcome, Cash. And I believe the feed on YouTube is always delayed, so I'll wait for a few comments there. I don't know if the comments will remain active once I stop the live stream. But thank you guys for joining in. I'll see you next time.